I coached over 70 people with zero trading experience, and all of them made $400 to $1,200 with a demo account first. Now they're trading with real money. If they can do it, imagine what a business owner like you could do with this strategy. So you can see here that the students here made $926 within that week. And the awesome thing is the money management. You can see how the trader loses $41 but makes then $304, or loses $78 and $52 but makes $409, or on another day you can see here $199 and then $187. The money management using this 1 minute trading strategy is something what's very important. Also the time management. In this case, the trader is trading at night because the person is from Germany, but if you're from the US, it would be between 9 a.m. and 4 p.m. anywhere 1 or 2 hours where you can free select your trading time. If it's 2 times a week, 3 times a week, some are 7 or like 11 times a month on average. So here we can see a couple of results. How some traders even have more losing than winning trades and still make $500 or even more. And this is just something what is really important when it comes to trading, is that the money management is there. And when that's well, you can see how the trader loses 21 times but has 19 winning trades and still made almost $7,000, $6,390, and the other trader made here $7,719. And everywhere the trader is losing an average $100, as you can see here, but when making money $500 or even greater. And that in average is something what is very important. And from there on, the awesome thing is we don't have to trade first with $100 a trade. We can start first small with a $300 or $500 account, learn how to trade with $4 a trade, what you can see here, and make like $12 a trade or like $17 a trade, what you see here. And then once that does work out, then we have here people, they trade with real money. You can see it with $80 a trade, but when making money is like $255, $300, or even up to $1,000. Didn't happen that month, was on the next month where the trader has the higher risk reward ratio. But here you can see a trader traded with real money, made almost $7,000, adjusting $70 in average for each trade, but then making $378, $490, or $350 in average for every single trade. So I'm going to show you some real money trade one of my students did, and then also an exercise you can do to become a better trader. So first of all, the trading strategy is also how you read the market. This sounds weird, but that's how it goes. In this case, this trading strategy that I'm giving you is a 1 minute chart only, and you can see all those bigger structures. So this is what you see here is just a 1 minute chart, and the square here on the right side is a 1 or even 2 hour time frame. That means using a 1 minute chart, we have 120 candles that can fit in this area. That means when you look at the past 120 candles and you see the market at this length, then it would be just an average, maybe realistic, that maximum the market would go this high up or this low down. So that means with a 1 minute chart, we already can see all the structure here, what is important to understand in what direction the market likes to go at. And always the market likes to go to bigger structure highs and lows. And this is the S&P 500 futures. That means the 500 biggest American companies. And what is really awesome with this market is that it runs for 30 minutes up to 5 hours in one direction, or even stays in one price area. And in trading, we only make money when the market is going in one direction. And so what is really important is that you see that the market is going up for hours, as you can see here. Making a picture in the beginning. The main exercise is we take a picture, we make a picture in the beginning. We draw in a square for 2 hours front. If you want to trade for 2 hours or 1 hour, you compare it to the last 1 hour, you measure it, and you just take notes that what happened if the market would go around the same length or even just 50% in the same direction. Where is the next target? And you can see from all this bigger structure highs and lows, this is the bigger structure low, this is the bigger structure high, that it makes sense that the market reaches this bigger structure high. And very often after the market is touching this or has touched this already, what happens is that the market is going in a consolidation phase. That means it is not worth it to assume that if the market did this length, that the market would do the same length. It's more like the market goes to its target, and then it will consolidate and sticks to the same price area, what would cause a lot of losing trades when you continue trading here. So we take a picture in the beginning, we take a picture in the end, and you can see the market was going to this line and then reversing. This is also what the trader was also expecting. This comes if you have more experience. And then when seeing that the market is going for 30 minutes or longer in one direction, you can see it was going down. Then the trader was adjusting here $80 to make like almost $1,000 or something. You can see here a risk reward ratio trade of 12 using just a green and a red candle. We'll go later on this video about the candles. What is more important is to understand in what direction the market is going at and to build a relationship to the market. Because if you're just right now using a market like the Nasdaq, gold, or Swiss franc, for example, the problem is that you will have way more less signals, and also the money efficiency on these signals is also way more less. That means instead of adjusting $100 to make $500, you just get maybe chances when trading just a green or red candle of adjusting $100 to make $300, because the market is not doing enough moves, even though if you go to a small chart like a 1 minute chart, because the smaller the chart, actually usually the smaller the stop placement. But when just using a market that has just that doesn't move that well, then the problem is just we don't get that many signals, as you saw in the beginning. So here you see that the market was going for 3 hours straight up. And then afterwards you see the market was really going up. And the awesome thing is this was the length what the market did. And the market did around the same length to this target, to this bigger structure high. And then after the market reached this high, you can see here the market starts to consolidate now, right? So the best area is to see, and the best time to trade is when we see that the market is going in one direction and it wants to continue, and then to aim for this bigger structure high and then trading towards there before the market is touching it. And this is something what you can see here with the trading strategy. The setup, the signal is just for buying a red and a green candle and selling a red, green and a red candle. That means what you should do first is concentrating on the picture first in the beginning. Then you do a picture in the end after your trading time, and you compare, did the market did around the same length. So what you do is, I'm going to show this to you live on the market, an exercise. You take a 1 minute chart on TradingView, you type in ES1 exclamation mark, US time 9 a.m. to 4 p.m., European time 4 p.m. to like 4 p.m. to like 10 p.m. for example. And then you draw in here from, for example, 10 a.m. to like right now we have here 9:43, so we go like to 11:43, around like 11:43. So there we go. So that's 120 candles what could fit here maximum here the square using a 1 minute chart. We put it a bit back and you draw in what the market did in the past. So if the market did this length in past, it will be realistic that the market continues like that. If it's a bit like shifted higher or lower, that doesn't matter if it's like this or like that, but at least like you would just assume that the market, if you just look at structure, here's a bigger structure high, here's a bigger structure low, and it would make sense that the market goes either up here or either down here. But what doesn't make any sense is that when we trade now here for an hour, that the market goes up here or down here. That just doesn't make any sense. It would be more speculation, because anticipation is we see what the market is doing the past hours, as you can see here, and we just assume the market will continue doing that. And it's a very trending market. That means you can first let it push 30 minutes along in one direction, and then we can trade there. That means we take a picture in the beginning like this. Make sure you put it always on the right side of the chart. You see all the structure. You don't want to have it like this or like zoomed in. You want to have it zoomed out like that you almost can't see candles, because this structure here, we want to see $1,000, $3,000, $5,000 moves. And then in those $1,000, $3,000, $5,000 moves, it's all about how many times can I see that I can adjust $100 to make $500. So an exercise for you would be first to take a picture in the beginning, to take a picture in the end, and then you take a third picture like that, and now write it down for you. Every green and red candle you try to mark. Like for example, for selling, green and red. This is every green and red candle for selling. Every red and green candle is for buying. That means like here, for example, when you see the market was going up and you see here, oh yeah, there's a red and a green candle that was buying. And then here, that was the only opportunity, for example, that maybe worked, but they didn't have a risk reward ratio of 5. If you're doing that on the third picture and you're just marking every color switch, for example here, green and red for selling. If you would have your entry on the color switch and your stop placement above, this would be a risk reward ratio of 5. That means we could adjust $100 to make $500 here. We could adjust $100 to make $500 here. We could adjust like $100 here maybe and to make $500 here. Also here, for example. And then also here, for example. And then also here, for example, what the trader was trading. And if you do that for green and red for selling and red and green for buying in that direction with your picture 1 and 2, then here you can see it happened 1 time trading down, it happened 2 times trading down, the trader was reading it, and the 3rd time is what the trader took. Because if you have a trending market, you will see 3 to 5 signals in one direction. You don't need to take always the first one to make more money. It's all about the mathematical thing. Is always the equation is when you lose 7 times $100, but you make 3 times $500 on average, you're making $800. And it's very nice to make the first 3 to 15 or even $50,000. And please do it first with the demo account. And this is no financial advice. This strategy is something what works really well. Do the picture 1 and 2, and then just look forward with the color switches, and then try trading it with the demo account, and you will see that your trading will improve with this risk reward ratio. If every trade you take to a bigger structure, higher low, has a risk reward ratio of 5 or even greater.